What if you could trade breakouts and retests automatically without guessing where the market might return to? In this video, I'm showing you a highly accurate tool that detects swing breakouts and retests in real time. No more drawing boxes manually, and no more guessing structure. This indicator does the heavy lifting for you, and I'll walk you step by step through exactly how to use it and take trades. This indicator is based on pure price action logic. It starts by detecting swing highs and swing lows using pivot points, which are some of the clearest structure levels in the market. Once a swing forms, the indicator waits for price to break either above a bearish swing high or below a bullish swing low. This gives you clean, automatic breakout levels without any manual analysis. But the real power comes from what happens next. After every breakout, the market almost always returns to retest the level. The indicator tracks these retests and marks them visually using colored zones and labels. Green zones show bullish opportunities, red zones show bearish ones. The name of the indicator is Swing Breakouts, Tests and Retests by LuxAlgo on TradingView. Once you apply it, you'll see a few settings that help fine-tune your chart. The display option lets you choose whether to show bullish signals, bearish signals, or both. The width setting determines zone thickness using ATR. You can decrease or increase it according to your setup, but default works great. Maximum bars and minimum bars control how far zones extend and how spaced out retests must be. Swing settings, left and right, define how strict a swing must be for the indicator to recognize it. The default values of left 10 and right 1 already give clean results. Color options are just visual preferences. There's also a set back to last retest option that keeps the chart cleaner by shortening zones after a valid retest. Now let's go over how to actually take a trade with this indicator, starting with a buy setup on XAU/USD on the 1 hour time frame. For a buy, the first thing you want to see is a green bullish zone forming. This tells you the market found a bullish swing. Next, you see for a clear break of structure above the top of that green zone. If that happens, don't immediately jump in. Wait for the most important part, the retest. Price should return back to the green zone. After price touches the zone, the next candle, or the second or third candle at most, not more than that, should close outside of the zone on the bullish side with a reversal bullish signal appearing, which is optional for extra confirmation. This confirms buyers are holding that structure. Once you see that confirming close, you take the entry. Your stop loss goes below the first candle, and your take profit should be at least a 1/3 risk to reward ratio. Now let's take a sell example using GBP AUD on the 1 hour chart. The rules are simply the opposite. First, wait for a red bearish zone to appear. Second, confirm a break of structure below the bottom of that red zone. Then wait for price to come back and retest the zone. After the retest, you want the next candle, or the second or third candle maximum, to close outside the zone. That's your confirmation that sellers are defending the level. You take the entry on that candle close, put your stop loss above first candle, and aim again for a minimum of 1/3 risk to reward. To wrap up, a few tips will help you maximize your accuracy. Avoid trading against the major trend. Stay away from high-impact news releases. Focus on clean zones only, and stick to higher timeframes like the 1 hour to 4 hour timeframes for better reliability. The LuxAlgo Swing Breakouts Tests and Retests indicator is extremely powerful when combined with disciplined retest entries and proper risk management. If you enjoyed this breakdown, make sure to like the video and subscribe for more high-probability strategies every week, and comment our queries if you have any.